Let's go. GM friends, and welcome to the very first episode of the Future of Gaming. In this series, our goal is to provide you weekly overviews and insights into what's happening in the intersection of blockchain technology and video games. In the spirit of Web3, our goal is to set up the future of gaming as a tokenized community and eventually, over time, evolve it into a full-blown DAO. More details will follow in the coming weeks, but if you want to be one of our first members, you can head over to thefutureofgaming.wtf and also join our Discord where we hang out. My name is Nico Vereecke. I'm joined by Collins and Devin Becker, and today we have as our topics Axie governance and the Axie Builder Program. We're talking about Merit versus YGG and the Illuvium land sale, and maybe some other stuff that comes up as well. But first, who are we? I'll start with a quick intro on myself. So my name is Nico Vereecke, or Nico is the name I go by because that's easier to pronounce for everyone out there, basically. My main daily activity is I'm a venture capital investor investing in blockchain and games with Bitcraft Ventures. Next to that, some of you may know me from the Metacast. It's another podcast that I do with Navik. We're also talking about blockchain and gaming. Then, Philip Collins.
Yeah, of course. Hey, I'm Philip Collins. I'm part of the investment team at Convoy Ventures, which is a gaming-dedicated VC fund that primarily focuses on platform infrastructure and tech within the gaming ecosystem. That basically means I spend all day, every day thinking about what the future of gaming looks like. So excited to bring all of that into these conversations with Nico and Devin.
Boom. By the way,
I just realized I'm outnumbered by VCs here.
Yeah, that's just, and they're the bad ones, so yeah, you're in trouble.
Yeah.
Go ahead, Devin.
So I am doing a lot of different tokenomics related stuff, economy design, things like that, mostly from kind of the game design side of things, but also into the economy design. So my main gig is with Nami. We're building out like an analytics platform, like a more advanced and explanatory version of something like Dune in a way. So that'll be hopefully coming out live soon. And then also doing a lot of consulting on the side for various projects that need help with their tokenomics or game design. Just trying to help better the economies out here so that the entire space doesn't crash, really, is my main goal at this point.
Nice. I've been seeing your name pop up in decks, by the way, Devin. I've told you, right? There was this game that I got, and then I saw, like, thanks to Devin Becker. And I'm like, hey, I know that name. So that's good to know.
It's always nice when you...
Yeah,
right, when you find it just popping up around.
Exactly. Well, yeah, and I still haven't figured out. I'm
gonna tell people start trading on my name if they're gonna do pitch decks.
I was gonna say,
like, you can't put your pitch deck without putting.
Yeah, that's a stamp of a high quality project.
I don't know yet. I'll have to see. I'll have to see if that's a good thing or a bad thing. Yeah. And also, Phil, have we done a deal together before?
You and I haven't directly.
No.
We
our organizations.
Yes, definitely in the past.
Yeah.
There's a lot of intersection in gaming VC, so it's everyone's.
It's not that big.
No, it's not that big.
When it comes to gaming
for how big the gaming industry is as a whole, it's actually pretty incredible how kind of small the pool of dedicated capital is, or at least the number of institutions that are devoted to gaming.
Mm-hmm.
Totally. Well, now A16Z basically gets to swallow everyone, right, with their bajillion-dollar fund. I think at this point, like, why even attach a number? Just say we have money.
Yeah.
It's fine.
Enough money.
Yeah, exactly.
How much? Enough.
Yeah, we have enough.
We'll be good. No worries.
What do you need? Blank check.
Yeah. All right. So let's dive in, right? First thing I want to touch upon, and it's related to what we're doing, right? As I said, we're trying to turn this community into a DAO over time. This DAO will involve tokens. It will involve NFTs. Probably soulbound NFTs, which is a new hype which we can go into later. But related to that, Axie is doing something similar. So they're taking governance serious. So yesterday I saw a post of the Axie Infinity Twitter. Today we reveal our forum for token-gated community discussions hosted by commonwealth.im. I headed over there. I connected my Ronin wallet, and so it's basically a discussion forum that is token-gated. So you log in, you connect your wallets. They know if you have Axies, if you have AXS, and there you can. There's governance discussions going on. I haven't been able to vote yet. I assume that will be possible in the future. But yeah, that's what's going on there. So they're taking steps into the governance direction. It feels like until now they were mostly assessing the community feedback in Discord, which might be like I think that's really hard to do, especially if you have a Discord with like more than 500,000 members. So
Yeah.
it's there. It's like, okay, press the button, which idea you like, and here people can actually like give feedback.
Probably better than taking it off Twitter, though.
Yeah, that's
to
true.
be honest, like
A Twitter vote, yeah. Why do you play Axie Infinity? For the deep and engaging economy, for the fun, and that's the thing they did.
no, the Twitter polls. I play it for the Twitter polls.
All right, so should we give your thoughts on governance of games? Maybe Devin, you've have experience in building games. So what are your thoughts there?
I've actually been part of a player like when I was a game design lead on a project. We actually had a player council, and so it was pretty interesting to see governance from that perspective, where it was more of a representative democracy, and I felt like that worked a little bit better than all of these direct democracy ideas, where like you go back to U.S. history and founding fathers even were like direct democracy is not a great idea, and that's why the U.S. ended up with a representative democracy, and I think there was definitely some value there, but it was interesting to see like this idea of like Eve does it too, right, where you have people campaigning for their spots and things like that, and it's hard to not get political when you have that as well, right? Like then it's just cult of personality and things like that. So there's give and take, but I did find it interesting to see this idea of having representative democracy where you're having people represent different parts of the player base. I found that to be really successful in that like this representative is representing this type of player and this type of player, and then they all kind of had a voice. And that allowed us to have really productive discussions where, because the thing is, when you're a game developer and you're trying to explain things to the masses, a good chunk of the masses willfully misunderstands everything you're saying. Whereas when you're like in a deep conversation with just a small group of like 6 people that represent the thing, you can actually have good in-depth discussions where you can communicate the objectives and the design goals and constraints of the game design and the game development, and have them understand, and then they can help you understand the parts of the player base that you might not understand, because generally game developers don't have time to play their game regularly enough. Outside of QA, most of the time you are spending just grinding away at making the game, and you like lightly test it as you're coding it to make sure the code works, but you're not really super engaged in the game the way a player is. And so having that kind of in between, I think that model, and I think maybe we go to that with delegated sorts of governance. I think going that direction would probably be the ideal way to do it, and I think it's a cool idea. Not to say that there aren't downsides, like I said. So I think it's going to take a lot of evolution. I think it was the Bankless podcast I was listening to the other day that was referencing the idea of speed running through both the history of banking and the history of governance. And I think we're kind of getting there, right, where we're kind of trying to see what works as fast as possible. And it's going to be very interesting because we're in a situation now where governance is not just enforced by politicians and police and military and things like that, but now we've got code participating in this idea, and I think that's a new thing that we're gonna, this is practice for us for when we have AI take over and rule the world. Like, we're gonna try and make sure Skynet is a good smart contract, basically.
Yeah, no, I mean, it's interesting because community governance is now just an intrinsic part of Web3 gaming, right? Such a big portion of what's been happening recently, and such a unique aspect of what's happened in Web3 gaming in the early stages is that switch from the top-down style of not only creating but also monitoring a game during its life cycle is now been entirely flipped around, and the community wants to be involved. That's part of the ethos of this entire ecosystem, and I think it'll be interesting to see how that plays out, because there are great aspects of that where the community's voice is heard in development and the community does truly get what it wants. But as Devin mentioned, some of the dangers of that, which we'll get to in the next topic we address as well. Self-interest will eventually kind of rule this space, and while having a community built around a token seems like everyone would probably be aligned and kind of on the same page. Gaming is in such a unique place right now where instead of having that unified community, you really are balancing the speculators with the players. And I think a lot of times what you see between those two groups is almost inversely related, where players want what's best for the game, speculators want the asset price to go up. And a lot of times as the asset price goes up, assuming that the in-game items are tied to that token, you're actually kind of depleting a lot of the value of the game at the same time, making assets more expensive, making them less attainable for the people that want to play. And so it's going to be really interesting to see that balance that was mentioned around how do you make sure the community has a voice without giving so much free reign that you just kind of see community generated chaos. And I think that'll be really interesting. But institutionalizing this and having a more structured approach, I think, is a net benefit for everyone versus trying to manage this in Discord. And it'll be interesting to see the tools and tech that continue to facilitate DAOs and making sure that community voting structures aren't a mess, because I think today it is hard to get thousands of people to vote on something and come to a unified conclusion that isn't too contentious. So I'm excited to see what's next in that space. I'm sure that's a topic that will come up often in our conversations.
Yeah. It feels like the way it's going right now is, I think every game designer agrees that major game decisions should not be made by vote by the gamers, right? And so it seems that a lot of them are agreeing that basically you choose what they vote on, and it's going to be trivial things, basically. So, what do you want the color of this to be? You have a clear voice. Our community has a clear voice in our game. I'm interested in the concept of delegations. The two that come to mind is ENS, where it's, so basically there was an ENS airdrop, and more recently you had the Optimism airdrop. So those were two protocols, blockchain protocols, where if you participated in it, you could receive airdrops, receive tokens for free. But if you wanted to claim them, you needed to delegate your votes to someone, and then you got a list of people who have put themselves up for delegation, and you have them make their case. And so, have we seen something like that happen within gaming? Two blank faces. I'm assuming no.
I think of. No. Yeah, no. I mean, on the optimism topic, though, there was an interesting kind of side effect that happened with the optimism airdrop. Was that some people sold their tokens, right? They got the airdrop tokens, they sold them, and then there was this proposal to block the people that sold from getting future airdrops. That became this big contention thing. There was satire, trying to make fun of that idea of punishing them. But it did bring up an interesting topic, this idea of votes being sellable. And potentially, if they're staking, governance tokens, or this idea of rewards themselves, if you're being part of governance just straight for the profit that comes by being part of governance and things like that. And I think that just brings up the whole topic of all of this stuff is about incentive alignment, right? That was the original undercurrent of what Bitcoin was about, right? Which was about trustlessness through incentive alignment by making it disincentivized to do bad things. And of course, that's the history of government, right? Where the disincentive is we'll shoot you or we'll put you in jail or whatever. But this idea that we can try and do it through technology by aligning incentives in a certain way, by designing incentives, and that's where it starts to encroach in game design, even if it's not about games. Is this idea of or those books like Nudge, right, where it's about pushing people in the right direction by just saying okay, the invisible hand, right, of if everyone follows their self-interest and we set it up so their self-interest is in the common good, we can do that, right? But designing it like that, super complicated. But that's why the idea of game designers becoming politicians in a way, because the idea that we as game designers, you can't ever solve a problem. You could just design the trade-offs. So you could say I'm going to make it like this because I know the trade-offs work better than this way, and I know what those will be, and hopefully I could design multiple things so the trade-offs feed into the other thing that compensates for them, and that sort of thing. But obviously, governance in real life is messier than it'll ever be on computers, and obviously as we start to get to metaverse concepts, right, it starts to bleed into that idea, and I think that's going to be a lot more problematic in the future. But that's why this is the future of gaming. We're hopefully going to work towards it one stumble at a time.
All right, governance. Yeah, it's going to be an interesting thing. My dream is that we continue the future of gaming, and that in 3 years we can have it so that our community could vote us away from this podcast and vote someone else in. That's the goal. That's the dream. Where it's truly decentralized and the community has a strong vote. And if there's someone who can do this better than us, which I'm sure there are, then they should be doing it. That's what it's about.
Devin,
okay,
we got to watch out, Devin. Nico's going to construct the votes, not let the community create them, and it's going to be me or you getting removed. Just 2 names.
Maybe
I'm working on my deep fake already. It's either going to be me or Mark Hamill on this podcast.
I'm waiting for one of you two smooth voiced gentlemen to be voted as that person needs to do the intro, because I'm sick of having to start this thing with Nico's voice. So yeah, that's what we're going towards. All right. So enough on governance. Axie also had another something interesting happening. So the Axie builders program has kicked off. Devin, I saw you on the Navic Discord asking people about that. I also have one interesting tidbit of information around that, but Devin, you can kick this off.
Well, I thought it was really interesting because the way it was proposed, so like there's 3 kind of blog posts related to that, right? So you've got the original announcement back in January where they announced it as 5K in AXS, and they said, okay, we have 5,000 AXS to budget for this. We're going to give people $5,000 worth of AXS. And then in April, they updated that to 10,000 and, added some constraints, things like that. But the weird thing about that to me was that you're saying you have X amount of AXS, but the value you're going to give people in is the dollar value of the AXS, which changes second by second, right? So back when they originally announced the program, AXS was worth $78. And now it's gone all the way down to $20, right? So then you get that confusion of like, so are we still getting $10,000 worth? Are we getting, the AXS pegged at a certain dollar value? And it gets a little messy. Now, I talked to someone for the Builders program. I don't know, if what they were telling me was necessarily like any kind of privileged information, so I don't want to say like exactly what they said. But it does sound like mostly that the dollar value that they said is still kind of what people are going to get. Regardless of that fluctuating AXS value, although as it goes through milestones, that may change in terms of the value. So it sounded a little confusing, and I'm not sure. I'll be honest, I don't think even Sky Mavis 100% has a solid plan on that, just because the way they've communicated it makes me think they're kind of adjusting it as they go. But the reason I think it's important, because they're talking about using AXS as part of that, AXS is not like this infinite set of money, and its value changes all the time. And it's also something that's part of their ecosystem, and it's not necessarily like money that they just printed they can go pay people with. And so it's like you have situations, for example, like, hey, I paid $10,000 over to this builder program, and now that builder program needs to pay payroll for their people. Now they've got to cash out that AXS, right? You got situations like that where they're suddenly taking the value of AXS even more. So let's say they're paid out in 3 milestones, right? And those milestones are actually tied to AXS price. You get all these people cashing out that first milestone. Then by the time it comes to the next milestone, AXS is worth less, right? So do they get less money? Like these kinds of problems when you're using fake money, essentially, translated to real money, but quoting things in dollar amounts, it gets very, very tricky. And I think, with Axie being or Sky Mavis really being one of the people starting to kind of push this idea and everyone always looking at them to kind of copy stuff, I think this messiness is going to be other people sorting it out, because they're going to try and copy what Sky Mavis did, and it's going to be super confusing on how you finance this stuff. And I even end up in this situation with people where they're like, hey, can I pay for your consulting in tokens? And I'm like, yeah, sure. Then I can go ahead and crash your ecosystem when I go to cash it out. And when it comes out, it's like, I'd rather, not do that situation where it's like, and that's why you have vesting time periods and cliffs and all that stuff. But as VCs, you guys know, because I'm sure you guys get tokens as part of the investments and stuff like that, it's a tricky situation because it's not real money in the truest sense. It's market-driven money, and that value fluctuates. And I think this builder program is going to be really interesting to see, because they even said people are going to be potentially dropping out, so that fund may move around. And then you've got the whole situation on top of that of Axie needing to make people whole for the hack that happened. And there's always the potential that AXS becomes part of that. And so they're in a really complicated situation, to be honest. And I think this builder program, it's exciting that they're doing it, but I hope it doesn't end up actually blowing up in their face because of all these complexities of finance that happen.
Yeah, no, I think one of the things that got me more excited about this was just kind of at the highest level. It's really interesting to see the Sky Mavis team try to expand the user experience of what it means to play Axie Infinity. I think, Axie was so popular, especially, back with about 12 months ago when that cycle really started going up. It was really about the economic model more than the core gameplay loop. And I think they're now trying to flip that around and add experiences to their already, large for the size of the blockchain gaming user base. And so they're really trying to deepen that experience, which is what I think the entire community is really looking for right now, is gameplay. And so it was interesting to see their approach to taking that community first gameplay direction. And it'll be interesting to see what it does for their engagement as well over time. I mean, it's hard to find anything else in blockchain gaming that has that captive audience that they can tap into. And so I'll be curious to see what the the player-based feedback is once these new experiences are layered on top of that kind of legacy game.
Devin, I want to push back on what you said. I think one of the strengths of this blockchain technology and what it allows you to do, right? It allows you to transfer value in a very easy way over the internet. I think I fully stand by or agree with Axie or the Sky Mavis team's decision to mainly reward players in their Axie Builders program in AXS. It just aligns incentives, right? It just makes sense. And so I think, the way I think this moves forward is people get rewarded in the native token of the ecosystem. And so everyone's aligned. And if you're going to start helping others in that builders program, because you know that if they succeed, your reward also gets worth more. So I think that fundamentally aligns incentives in such a good way that it's the way forward. And I think when it comes to fluctuations in the price and the value, that's a key concern. There's two ways around that. Either there is parts of the rewards program is the majority is in AXS, and which is more the forward looking, which is if this all becomes very successful, then you'll this is your put option or your call option on a successful future for this. And then a part of that to pay payroll, a base layer, is maybe in stables, something like that. And another option, which I think makes even more sense or is even more crypto native, is if you're part of that builder program, there will be services that will tell you beforehand. So let's say that, as part of this builder program, you will receive, let's say 10,000 AXS, and they will say, okay, every month you pay us, you'll essentially be able to lock in a fiat price every month so you can make payroll. And, they'll tell you, okay, so you give us, let's say, 500, or maybe that's too much, maybe 100 AXS tokens. We'll give you X amount of dollars, and then you can make payroll, and we'll take the exchange rate risk essentially over time.
Yeah. I totally agree. It is a really interesting way to align incentives, because it's not just about the kind of upfront subsidy that these developers are getting. Theoretically, the best developers are going to drive the most engagement, and that engagement should drive the entire platform forward. And so as they do that, not only will they probably get a disproportionate amount of AXS, they will also see that price appreciation as well. And so it really is that virtuous feedback loop for those developers. So I totally agree, Nico. It's definitely kind of core to the incentive alignment we were just talking about.
Yeah, it's tricky because you end up in this weird situation, right, with crypto, where we tend to treat token values as if they're real dollars, right? We value them in dollars. We look at the exchange. We say, I have X amount of money, right? But you don't really have that money till you realize it, right? Till you exchange it for something you can use. And that's for right now, right? Obviously, if the world becomes more crypto native and these things start supplanting money in some way, then this argument's not really valid anymore, right? But for right now, the actual value has to be exchanged for. You have to exchange for that value. And in doing so, that has side effects, right? There's different effects as a result of that. And I think a lot of people, when we're talking about incentive alignment and value and things like that, we're treating it like it's equity or stocks. And it doesn't operate the same way as those things. And I think that's where you get into some tricky problems with the analogy of it being like stocks. And I think it could be more like stocks, right? But obviously then in the US, you start to get SEC problems and stuff like that. So that's a tricky situation to get involved in to begin with, right? And, there are, I'm not saying there aren't ways to handle this, right? Let's say, for example, they need to make payroll and they want to be able to do so without having to sell the AXS on the open market, right? So they go, hey, we need to make some payroll, so we'll sell it in private sale off market to Sky Mavis or to whoever, right? There's ways to cash it out without doing it in an open market in a way that could potentially crash the value in some way, right? And so there are ways around it, but I just feel like you end up in situations like Ogami, for example. They put out a blog post where they were talking about they were trying to be in the Axie Builders program, and they had to peace out because they couldn't make payroll with all the rules that it had on it, right? And they would have, being that payroll was an important part of that, they were going to try and fund it a different way because they weren't going to try and fund it off AXS. So they're like, oh, cool, we'll fund it off NFT sales. But that was against the rules. And so you end up with these situations where you kind of have to be careful if you're someone like Sky Mavis. If you restrict people from making money other ways, then they have to sell the token to be able to make their payroll. And that's on Sky Mavis to make this tenable in some way, whether that be through stable coins, as you mentioned, or other ways of doing it. I'm not saying it's not doable at all. I'm just saying this is dangerous territory to just blunder into and not realize that you're going to have side effects, because tokens aren't money yet, right? Until you realize them. And I think this is a problem I see across a lot of game projects where they treat it like it's money before it is. And I think as we evolve this industry, we're like, better figure that out, right? Like, because I still feel like we're like in the hangover from the ICO phase, where everyone's just like treating like they could print money, and like it is still money, but it's not yet. And NFTs have kind of like obscured that a little bit too. But I do hope this evolves. I hope that I'm totally wrong about this in the future, and that people like sort this situation out. But just for right now, it's more like let's pump the brakes on like treating it too much like money just yet, and like maybe think about, okay, let's I totally agree with you though, like in aligning incentives and making it long-term value, like the way you do with stocks or equity and things like that. Totally a good idea though. And I just am more like cautious about the way people think about it incorrectly, that causes problems long-term. And it's not like Sky Mavis hasn't made missteps in the past. I'll put it that way.
That's true. But they're so far ahead of everyone else that they're just, stumbling and falling and clearing the path for us.
I hope they say that way. I mean, someone needs to lead the way, right? Like, even if it's just their dead body pointing, don't go this way, but
Devin,
someone's got to do it.
Yeah, we have
dead body. So negative.
I know we have the fortunate position of talking about the future of gaming. A lot of these projects that we talk about are in the more difficult position of trying to build the future, and we're definitely going to see people stumble along the way, and that's all right.
Well, you guys are the ones throwing money at them, so
But
you
Devin,
guys are responsible too.
You know what they say: if you can't build, invest. So here we are,
right,
trying to like think or act as if we know what's going on and we know how the world works. And in reality, we're just I don't know. It's basically
no. We're all making it up as we go. Like,
exactly.
It's fun.
Exactly.
It's a good time. As long as my money's not on the line, I can enjoy it more.
Okay, so as long as we're talking about we're making shit up as we go, right? Let me tell you, because this is a bit of an answer to your point, Devin, around they treat their token as if it's money. So I'll tell you we're talking about the future of gaming. I'll give you my view on the future of personal finance, which, because we're moving towards a world where gaming is way more involved in everyone's lives, I think will be related. And so the way I look at it is is essentially every person at some point will decide their net worth allocation digitally. And so, for example, I will say, okay, for my liquid net worth, I want to be 20% in Bitcoin, 20% in ETH. I'll have 20% of the global stock market, 10% in AXS, and then the remaining 10% is divided over a bunch of games that I'm playing. And this is just like a random example. And so there will be no, we won't need dollars anymore, essentially. Like, it could be that we still talk in dollars, but the moment that I pay for something like a beer, there will be so funds will be pulled from all of my different pools, and then the transaction will be made towards the shopkeeper that sold me that beer, and they will have their own little matrix or little division of maybe they're more risk averse and less into the metaverse, so they'll like 100% in bonds or physical gold or whatever, right? And it gets distributed to their allocation, and so there's no need anymore for a dollar to hold. There will be no need to hold dollars or to hold this fiat currency.
Right. We talk about everything converting to fiat as a way to make money right now, because that's the situation right now, right? And I'm sure in the past it was about how you could convert your paper to gold, right? So I think we're just in a transitionary phase, and I think what you guys are talking about is something that works better when we get to that point. But are we getting to that point based off central bank digital coins first? You know what I mean? Do we have to baby step through the government for I'm optimistic about the future, but also very skeptical, because I've seen a lot of the repetition of certain things from the past, and I'm always hoping I'm wrong in the skepticism here. Don't get me wrong. It's more just I hope this doesn't happen, because I've seen it, before. But for example, the way people value net worth, for example, is tricky, right? Because when people say I'm the richest guy in the world, but it's all in stocks, and stocks can change value every single day. It's a lot of people right now, a lot of people's net worth, I think, is going to be very different next year than it is this year if they're measuring it in stocks and a lot of other things, because I don't think the economy is as stable as people think it is. And so it's situations like that where it's if they're not cashing it out to a more stable asset, for example, and not fiat maybe is actually one of the least stable assets potentially, depending on how things go over the next couple of years. It's a situation where you are treating your assets like they're stable when they're potentially not. And that's my concern for people, is because they behave based off of that. And that's cool for right now until it's not.
Yes.
And I think people treat Black Swan events like they're rare. And it's like, no, that specific Black Swan event was rare, but Black Swan events in general are not that rare. And I worry about the situations with people, because we get in this optimistic building cycle, and then we end up with a crypto winter when all of a sudden, like, oh no, we didn't see that coming. It's like, well, you probably did. You just were being too optimistic. And I do want to power through those things. I want us to just be like, it's summer building now. Screw bear markets. Like, bear market just means we're in the cave with the bear building away. Like, totally for that.
Yeah. That's really interesting. I think there's some lessons to be learned in what you're saying for company treasuries, like crypto native game company treasuries, right? Where they're holding a lot of ETH when they sold a bunch of NFTs, stuff like that. There's definitely lessons to be learned. And it feels, I've said this in the beginning, right? A company that provides certainty throughout these times, that takes the fluctuation in price risks on them, those must exist, right? Anyway, so feels like there's major opportunity and major use cases moving forward, because this fluctuation is not going to end.
Yeah,
right?
And I mean,
right. And you guys are finance.
Even think about projects that did public sales, significant public sales 6 months ago. If you don't convert that into a stable coin or fiat of any kind, you might have a significant discount of the capital that you initially thought you had. So you roadmap for one thing, and then you get to today, and it's like, oh wait, our roadmap was built around an unstable asset.
As long as it's an algorithmic stable coin.
Yeah. I mean, if okay, let's not get into the Luna USD story. That's maybe for a different time, or maybe we'll never have to talk about it.
Past.
Yeah, that's the past. Yeah.
Yeah.
Anyway, okay, let's move on to the next topic. Phil, you wanted to touch upon Merit v YGG?
Yeah, for sure. So this goes back to what we were talking about around, kind of DAOs, the perception of DAOs, and the way they're going to function moving forward, and how decisions are made. The high level on this is Merit Circle has seen a proposal come from one of its community members trying to kick YGG out of its investor community. It is claiming that there's just been a fundamental lack of real value add, and value add's kind of been one of the token words of Web3 fundraising over the last year, as the funds were just trying to get into every round. Rounds are kind of spiraling and becoming incredibly oversubscribed. And so essentially what would happen is YGG's $175,000 seed check would be returned to the company, and they would no longer be a part of that investor cohort. This is an interesting one, because it does show what we were talking about initially about if anyone can propose anything, what can happen. I think, setting that aside for a second, this is a strange situation that I think could only happen in Web3 over the last year, where there's been such a mentality of, rising tides raise all ships. And that's definitely been true, right? Better projects bring more people into the ecosystem. More people in the ecosystem benefits everyone in the long run. But in this case, we're talking about two direct competitors, where any value add that YGG is providing to Merit Circle, it's essentially counterproductive to their core business. And when you look at YGG's core business versus a $175,000 check, I think they're going to go core business every time. So in this case, it's an interesting iteration of what incentive misalignment looks like. And so, who knows how this is going to be resolved. I think YGG's already put out their, official kind of professional statement on the value add that they have provided and why they don't think this decision makes sense. But it is an interesting case study, not only in how the blockchain gaming ecosystem has interacted over the past year and how we've gotten into some of these situations, but also, what is the decision that is ultimately made here suggest for the future of DAOs, the credibility of certain votes, and whatnot.
Really fascinating. I've already said this on the Metacast a few weeks ago. I find what's happening is in this specific case very similar to, I take insurance for, let's say, car insurance, and then after a year, I'm like, hey, I didn't crash my car. I want my money back, right? Yep. It doesn't work that way, right? It is like, there's like this, it's like results-based analysis or something.
Yeah.
It just doesn't make sense.
And it's ironic too. It's not like YGG can go to Merit Circle and say, hey, you underperformed what we thought you were going to do, so we want our money back. Actually, it's a one-way street.
That's actually
there.
really good.
So
yeah.
Well, as VCs, is this something you guys run into as well? Like, if you go invest in a game, right? Can you go, well, your game actually didn't turn out very good. We want our money back. Or can they go like, hey, you know what? We don't really like the value add that, Bitcraft or Convoy is providing to this game. Here's your investment back. We had enough investment from other people. Like, we don't really need your help anymore. Or like, especially ones like A16Z that are like super involved, right? Like, want to be very hands-on. Like, what if they're like, you know what, you're too hands-on. Get your hands out of here. They're not welcome anymore. Like, are the deals that you guys set up, is there situations like where that can happen, or is it like contracts, right, as opposed to DAOs and guilds and stuff like that?
Well, I mean, everything that we do is formalized in a document, and so there is literally no room to go back on the deal from either side, right? This is an agreement that you make. And I guess 100 years ago, these problems emerged in like traditional worlds, in the traditional world and with companies. And then, people figured out, okay, if we add that in our contract, then the law protects us from these kinds of issues. And I guess what we're seeing now is this new concept, this new token, like we're giving legal power to a community of people and giving them voting rights. And so I guess the big question for me, at least, on how this resolves is what legal power does a DAO really have? And because there's also different entities, and like I don't know anything about the legal, or not enough at least, around like regulations and different jurisdictions and how those interact, because it seems like you have like a company, and then you have a DAO, and then you have a foundation, and they're all like interacting. And so I don't know how this plays out.
I thought code was law in Web3.
Well,
like, why isn't the code sorting
that's
it
the
out
great
for us?
irony of a lot of this is, in these situations, you're signing legal documents. You're working with traditional lawyers and signing legal documents, whether that's a SAFT or something else. It is interesting how conflict resolution in the Web3 space is still going to come back to the centralized courts when there's an issue. And anytime somebody has a problem, it's, we're going to resolve this with the courts. And it is funny how everyone wants it to be decentralized until they have
I got
an
a
issue.
genius business idea then.
What's that?
What do you say?
Arbitration DAO.
Do it.
Just
Build
an
it.
arbitration DAO.
Yeah, build it.
Yeah, there you go. So people have to sign into that like via smart contracts, so that code is law, and whatever the arbitrator decides is done, right? Because you have that. Like, I don't know if that's necessarily just a U.S. centric thing. But we do a lot of things where we force people into binding arbitration and stuff like that to avoid lawsuits. But I wonder if like that ends up being a thing for these resolutions, so they don't have to go to the legal world. Is that you say like, hey, here's some neutral parties in Web3 that we know understand Web3 problems and aren't part of the old world, but are like new world people. Because you end up with that problem, right? When you try and go to the courts over technical stuff, and you've got technically inept, judges that are 90 years old that have no idea barely what a computer is, trying to resolve technical issue, it's very difficult. But if you have like arbitration that's done by Web3 natives, stuff like that, maybe that's a way we resolve these kinds of disputes between DAOs or between guilds or these things, that so it doesn't have to just go to lawyers all the time, because we know that's very expensive, right? Like doing that, then it ends up being pay to win sometimes. And obviously we don't want those kinds of situations, because we're about distribution and like everyone being more equal and stuff like that. And you can't really achieve that if lawyers are more equal than others. You know what I mean?
Maybe we can do that over time. We can become like a independent, neutral party that helps resolve some of these conflicts, specifically in games.
Guilty.
Exactly. Are you calling YGG guilty, Devin? Is that what we're saying, or?
I didn't pick a side. I just
Okay.
they're both guilty, I'm
All
sure.
right.
Probably. There's two sides to every story.
Yeah, that's true. All right, let's see how this plays out. And then finally, we were going to talk about the Illuvium land sale. Devin, you want to start your rant, or?
Yeah, but start my rant about swampland. I like the idea of a land, right? But everyone is kind of going about it in this very money-centric kind of way, which is like the last thing you really want in games, honestly, is speculation. That's not what, unless the game is about speculating, then that's fine. Like something like Upland is almost kind of about speculating, right? Like that's fine. But if your game's about gameplay, and speculators a lot of times can just be value extraction in a way. Like they're detrimental in a lot of ways to the games. And so these land sales that come out before games are playable, who's going to be investing? It's almost exclusively going to be speculators, because they can afford to do it more. so than a player more often than not. Now, don't get me wrong, there could be whales, right? Like there's whales in the space. There's players who have a lot of money too. Like otherwise no one would be playing half these Web3 games because a lot of them are too expensive for non-whales to be able to play. But these situations where a lot of people are looking at flipping. They're looking at like, I'm going to buy this to flip it, or I'm going to buy this to rent it, I'm going to buy this to lease it. These land sales, you end up with these problem with like, especially metaverse ones or virtual worlds like, Sandbox and Decentraland. But when it's in a game as well, it becomes really kind of problematic to be. And okay, let me rewind this for a second. The reason I'm bringing this up is the starting prices for the land for Illuvium was extremely high. And I'm sure Illuvium is a great game. There's tons of utility on the land, right? Awesome, cool, but the prices are very high. Now, the upside is they were Dutch auctions. So they were meant to go down over time. That was meant to kind of resolve it. It did a little bit, right? So we had 1 day's worth of data, and most of the sales ended up about a fifth, or about 20% of the starting price. And, that's not too bad still, right? Where that goes down quite a bit from some of the starting prices, especially for some of the more expensive ones, like the tier 4 lands, because they were in tier 1 through 5, although the 5 didn't get into the sale because of some problems they ran into that was just 1 through 4. But it was interesting to see that not only were the prices very reduced, most of it was paid in the Sylv 2 token. So it wasn't actually even a lot of it wasn't Ethereum. So like you could pay in Ethereum, or you could pay in Sylv 2. But a lot of people were just paying in the native currency of the game and kind of giving money back to the game. And so like maybe that's a good thing in that they're cycling the economy, treating it like a sink in a way or something like that. And that was part of what Sylv 2 is for. But it's interesting that they did raise a decent amount of money, but I don't know how much of that was purchases of Sylv 2 specifically for this, because there was some value advantage in purchasing Sylv 2 and then using that to purchase land, like a little bit of arbitrage essentially in the conversion. Yeah. And I did see the prices of Sylv 2 went up quite a bit over the last week. Okay. So people definitely bought it either for this land sale or as part of this land sale. So it's a little mixed, and we'll see how day 2 goes, right? Because day 2 is not over, although I'm not sure in terms of the time zones. Maybe it is over already, but it was interesting to see like the very first hour prices were like boom, FOMO. And then all of a sudden it dropped very sharply as people went like, wait, I don't know, like maybe let's wait. And I do want to see how the day 2 and so I go forward, because you have the people that were really, really motivated are mostly going to be buying day 1, right? They're the FOMO types. They're going to be like jumping in, buying it, speculating. And then from there, it kind of dwindles. And we saw the Dutch auction, for example, with Champions Ascension. Like they ran into problems with it really stalling out. And so they tried to do things with this Dutch auction where they did it in batches that were limited in time, but over a longer period of time. So it'll be interesting to see if this particular methodology works over time to try and compensate for high prices, because you're allowing for some price discovery via people being patient. But this is like, it's funny because you're taking speculators who are not known for being patient, right? They're meant for pouncing on deals as soon as they see them, like versus people that want to get a good deal. And it's a tricky marketplace. And I do hope Illuvium like makes good on the value of this land and whatever. But realistically, I don't think like paying $2,000 for a piece of virtual land in a video game is going to be worth it until we're like Ready Player One territory. It's not like long term. I mean, I know inflation's a thing and all, but I don't see that being like a great value. And I think, I mean, I hope these people have fun with the land, right? Like, and that the value is in more than just money. The value is in fun. But let's be honest, like $2,000 for virtual land in a game, like they're just hoping to sell fuel and whatever else to other people to make that money. And I always like to bring it back to like the Splinterland sold land. And it is kind of funny to bring it up because it's been like a year and they still haven't implemented it yet, but it was like $20 a land plot. And it was like people just underestimated it, didn't buy it. I managed to get it on like the last day before it sold out, and I'm just like, oh yeah, $20. That's gonna be like $600 worth right now, and like, but the utility is good, and the utility is absolutely worth $20. So that was an example where the land sale was totally worth it, and this was before land sales were super in vogue, right? Like before everyone was doing tons of them. There was still like a little bit of a thing, right? Like land sales were still a known thing, and it's not like Splinterlands came up with it. But that was an example back before everyone was like pumping up these prices like crazy. And I hope we get back to that territory where prices are reasonable again and people aren't looking to do that. I guess you could contrast it with something like crypto unicorns, where the land is part of play as opposed to being like you're buying it for, to sell something to other people. and stuff like that. And obviously crypto unicorns is still a little bit expensive for land, and I imagine that will come down over time. It's more like early adopter tax, I guess, at this point. But I don't know. There's a lot to unpack there, I think, from land stuff in general.
What was raised with the Illuvium sale until now, in dollar terms?
I heard at least, I think, was it 24 million in the first 24 hours. Wow. I don't know if that was purely an ETH or a combination of ETH and Sylph 2, but that was the number I'd heard quoted. And there's like a dashboard that shows a decent amount of data for anyone who wants to like go to Dune. There's a pretty good one that's like ILV-land-sale.
Okay.
That's got pretty good data as well. So if you want to kind of watch it more live, I recommend checking that out. But it was definitely quite a bit of money, right? Well, but I imagine a lot of that was probably in Sylph too, overall. Because if you look at the numbers, it's like, was it, let's see, sales in ETH, or no, total ETH raised was 2,800 basically, and then Sylph 2 was like 116, almost 117,000. So it's a pretty big difference. So
let's do some math here, right? Okay, you said 24 million in 24 hours. There's still a day left. So let's say that they raise $30 million. So $30 million, and I know that it's not exactly dollars when it's invested in the native token or in ETH, but I think it is, because you could also sell your ETH or that native token. What is Sylph 2? You can also sell it for dollars. So let's say 30 million in dollars, because in my opinion, I think 95% of those dollars are speculative dollars and not gameplay dollars.
Mm-hmm.
Would you agree with that? Okay, assuming you agree with that. So what is 5% of 30? It's 1.5. Is that 80? 28.5. I'm doing math live. It's probably a bad idea. Anyway, so let's say 28 million of that is speculative dollars. So 28 million wants to see a return on investment. The kind of returns, the kind of multiples on investment capital you want to see with very risky plays like this is like 5 to 10x, right? That's what you're counting on. So, which means that the land speculators, let's say 10x, you want to see a 10x multiple return. You want to see the value of your land increase from 28 million to 280 million, which means that the speculators, so the people buying this land, expect that they will be able to extract 280 million worth of dollars, today's dollars, of value within that game, which means that game has to be as successful as some of the top games out there, right? Because they're not the only one able to extract anyone. So they're counting that the game designers designed the game in such a way that the land value extraction is high enough for them to make that amount of money over time.
Right, and there was a good deconstruction that Navik did of like the sandbox valuation stuff that really kind of put that in a good perspective of like, you guys are expecting this to be like an insane platform that everyone lives inside, like it's Lawnmower Man 2 or something. Yeah. And it's I don't think everyone's going to be like, I mean, maybe some people will get their money's worth and stuff like that. And just for context as well, Sylph 2 right now is at $189 each. So just to give you an idea of like price.
Yeah, and it's so interesting too, because these Dutch auctions also anchor people at such a high point that once it's come down to 10% of the value, you're like, oh, I'm getting an absolute bargain right now. But you don't, you might not do the math that Nico did of 28 million. This needs to get to 280 to 10x it. It's more like, oh, this is at 10% of the price. If it just goes to the top of the Dutch auction, then I've 10x'd. I think sometimes there's some backwards math, and we're also not used to being in an environment where these assets are on sale, kind of quote unquote. So I think people are really trying to capitalize on that. And normally you would think that this kind of market maybe pushes the speculators out a little bit, where they're kind of on the sidelines and you get the real gamers. And so you kind of get the price sensitivity of the gamers and get back to the true asset value. But I mean, based on what we're seeing, like you mentioned, even at the prices this land is selling for, that's steep for a game asset for a game that isn't out. So
especially when they assume the game's going to be out, like, oh, but I'll make that back over 5 years, and it's like, can you point to a crypto game that's been out for 5 years successfully? Like, good luck with that one. I mean, I'm sure there will be games that are successful for long periods of time, but that's not going to be the norm, right? Like, that's not going to be the majority. A lot of them are going to fail, and it's like, even if they succeed, it might only be for a year or two. We don't know what the macroeconomic world will be like in a year or two, let alone the individual economics of this game. And so it's like, you don't want to be short-term thinking like, oh, I'm going to cash out in 6 months in this thing, but you also want to go like, am I getting 6 months worth, like out of this? Because that might be all it lasts, especially for a game that's not out yet. That's where it gets even more speculative. It's like, if the game's out and it's good, like that's why I was happy to buy the Split Lands land, because I'm like, I like this game. I know what value they're going to add with this. Like, this is probably worth it, $20, whatever. I'm willing to spend $20 in the game, no problem anyways. Whereas it's like, you're talking about pulling out thousands of dollars, and you're like, this better be pretty good land. I mean, I better be able to live on it, because I'm going to be broke soon, and I'm going to have to like build a house on this land. So that's the future value of Metaverse land, is being in a tiny studio apartment, like with a VR headset on, hoping you can kind of live in
It's going to
there.
be fine, because Metaverse Devin is going to live there, and that's going to be the more important part of your life, rather than your real physical
You're gonna need
existence.
You're gonna need like 3 square meters to live in IRL, and your Metaverse loft.
Believe me, I'm all for that future, man. I'm all just, as soon as you make a VR headset I can wear all day that's comfortable enough to where I could just have whatever I want in my tiny little apartment with like a feed tube or something. Hey,
Living it.
I'm pro it. Don't get me wrong. I'm not bashing that. I'm just saying that's where you're gonna have to go.
Devin is already living away in the future. He's already there.
Yeah, man, I respect it. One last point I want to make, Phil, you made me realize, is I think that people active in a financial way in the metaverse, which will probably be everyone, will have to get so financially sophisticated, or the tools will have to improve so much. Because, and I think a very good example of this is Luna. Because this anchoring concept where you talked about, Philip, it's so important, it's so relevant. And so what happened to Luna was at some point it was at $100, and then because of the the UST depeg and the mechanism where you could redeem your Luna for at least $1 worth of UST, so there was this arbitrage, and so essentially Luna went from a supply of like 300 million to like I don't know, 500 trillion or something like that. So there was like a 1,000,000% inflation over like a week.
Yeah.
And so there were people like, holy crap, Luna's worth like a fraction of a cent. Like, and 5 days ago it was worth $100. Like, I'm going to buy like $5,000 worth of, I'm going to have like millions. And if it ever even goes back to $1, then I'll be super rich.
Yeah.
Not realizing this concept of, hey, the dollar term of an asset that is hyperinflated is like the bad representation, and don't use these values as an anchor.
Yeah.
I think that's one concept that's important, right? Just the amount of tokens in existence. I think there's other concepts which are important as well, which is the tokens that are held by the treasury itself, right? If you have a governance, like for example, AXS represents the Axie Infinity Treasury, but the Axie Infinity Treasury also holds AXS. So it also holds AXS. So essentially, you can subtract the AXS that the Treasury holds by the total supply of AXS to get a better view of what this whole thing is worth. And so there's a lot of like ways to make things less clear and less like, okay, this is the market cap of this thing or this company, right?
Yeah.
And so I feel like this like maybe we can that's I think partly of what we're doing here. It's like thinking about these things and putting them into perspective, but there's going to be a lot of education needed, and I feel like anyone who has any kind of success, or that you need a lot of education if you're not going to be taken advantage of in this highly complex financialized metaverse that we're moving towards. And I think it's inevitable, right? So it's really necessary.
Yeah.
Unfortunately, greed tends to override rational thought, and con artists have been preying on that for decades, centuries, because it's just a natural thing where it's like as soon as we see a really good deal, like, hey, it's 20% of the starting value, you just don't do those calculations anymore. And it's like, and that's why price anchoring, that's why all the people that did the behavioral economics stuff, part of the exciting thing about those was that they worked even if you knew about them. And it's like they were kind of education resistant. And so I think that's where the argument, and I'm not necessarily for it, but that's where the argument comes in for things like regulation, right? Where you start to get consumer protection laws and things like that, because they go, we don't think people are stupid, but we think people act irrationally in situations where people can prey on that and take leverage off of emotions or irrational behavioral economics behaviors, like price anchoring and stuff like that, or decoy prices. All that kind of stuff, it works consistently enough that it doesn't matter if you know. And I think, we're definitely, like, the nice thing about all this crypto stuff is it's forcing people to learn so much more about the way money works. What I worry about is people taking wrong analogies, like I was talking about with stocks and stuff like that. Because in order to try and understand stuff, people try and start to use analogies from things they understand outside of finance, right? But one thing I've learned with finance is if you don't understand the fine details, that's how you get screwed very easily. And I'm sure you both know this. Being in finance, I'm not in finance, and that's part of the reason why, because I know I won't go into details enough and I'll screw myself. But it's one of those things where it's like, I do want everyone to get more educated. I want everyone to understand this stuff, and I sound overly critical sometimes, not because I want to tear it down, but because I want to build it up from the right foundations. I want to say like, hey, let's do this thing correctly, so that it's not just rug after rug after rug, or crumbling Ponzi or whatever. Even if it's not an intentional Ponzi, like if it's just this unstable house, that's what I don't want to see happen. Is people continue to do that, and it sucks because it's like a lot of people are doing it with good intentions. Like they're building this stuff, like they're like, this is really cool, this is worth so much. And maybe it is to them, and I don't fault them for that. But at the same time, like, until everyone, like, it's going to go in baby steps. We're going to kind of, like, continue to, like, the future of gaming right now is kind of making enough mistakes that we learn the correct thing to build each new step, right? Like, and I like to point to, like, early mobile gaming, right, where there was just so many stumbles in early mobile gaming trying to get to where we are now. And now we've kind of peaked, unfortunately, in kind of mobile gaming to some extent. But we did learn a lot of stuff along the way. And free-to-play was developed as a whole economic model along with that. And now we've got to come up with a new one for Web3, stuff that maybe is free-to-play-ish, maybe is not. And it's going to be another learning period. But it's also forcing people to learn about money in a way they just didn't before. The term fiat is now like a normal thing. And that was like a derogatory slang, essentially, for dollar originally. And people are using it now like almost interchangeably with something like stablecoin, right? And so like this financial literacy into almost this sort of slang urban dictionary world is look good and bad, right? It's good as long as people understand what the hell they're talking about, but chances are half the time they're just saying the words. And so, hopefully people that listen to this kind of stuff, like the people that do want to educate themselves, like continue to do that and then build cool stuff with that information.
I think fully agree, and I think the value of signaling will become very important moving forward. By which I mean, like, if I see a game being backed by Philip and Convoy, right? I'm gonna be like, okay, they're legit, and I think funds will have an important role to play as this is very highly likely not a rug pull. That's one. I think influencers in itself will people will rely on other sources to do the due diligence for them, essentially.
That's kind of what YGG became to some extent, right? Where people looked at it as a stamp of approval from guilds, and then other guilds would follow them, and it became a brand around that. And it's same with a lot of the VCs, right? Like you guys are essentially acting as this sort of stamp. Well, they put millions into it, so it must be a sound project, and maybe it may not be, but you're right. Because people can't there's too much information to do your own due diligence on everything. And so people are going to have to look to stuff. That's part of the reason, not to plug my own thing, but that's part of the reason we're building something like Nami. It's to help people to be able to do their own kind of due diligence on game economies through analytics and stuff like that. But at the same time, if you don't educate everyone on how to understand that stuff, maybe it doesn't help a ton. But like you said, reputation is going to be super important for this stuff. In who is saying that, and that's why you got celebrities, right? Hey, if Snoop Dogg's pitching it, right? This must be interesting. Or if Kanye's now going to have NFTs, we do sort of look to that stuff because we look to other people doing that due diligence and then giving the thumbs up, and we consider that a tacit endorsement. And that's going to have to be the way forward because there's just too much goddamn information.
Yeah, and that's what it's been in the past too. A lot of projects I've talked to in the past in this space, they didn't necessarily need the money, but they wanted to raise $3 million from people that they viewed as credible across both gaming and Web3. And that was their stamp of approval of, we're a pre-release product, but X, Y, and Z backed us. And that's our flag in the ground. And so there were literally rounds where it wasn't even, the capital was important, but equally important in the founder's mind was the credibility that they were going to get from some of the names that they were associating themselves with.
Feels like we've come full circle back to the YGG merit circle story of if YGG is involved, then this is legit. All right, we're coming up to an hour. I like to keep these podcasts shorter than that or around that. So I think I liked it. I think it was a good first episode. Listeners, I hope you like too. Phil, where can people find you?
I am at Philip M. Collins in most places, Twitter, Telegram, anywhere you want to reach me. Always happy to talk about gaming and Web3 gaming.
But best place to find us, by the way, is probably our Discord. But how about you, Devin? Where do you hang out?
Yeah, obviously in the Discord as well. I'm on Twitter I have MZO as well, but it's more the crypto stuff is on OX or 0x MZO.
Oh shit! I didn't even know you had two Twitters.
I have too many, but it's one of those things where you got to divide up your audiences, right?
I
like
get that
not everyone is interested in crypto, and
there's stuff I'm into that I just don't talk about on Twitter, just because people following me were like, "What the hell? Why is this guy so much into into reverse selling stakes?"
Especially the way crypto Twitter is.
Yeah. Or like, why is he posting cat pictures all of a sudden? So I keep my cat pictures to my own phone right now. Cool.
Yeah. So easiest way to find us, of course, is just everyone come to the Discord, right? Like.
So join. Well, you can go to the Future of Gaming. No, it's like futureofgaming.wtf, and then you can join our Discord from there, and there we hang out. We can have these conversations, and if you want to help out, so this is the goal is to have the Future of Gaming become completely community led, and so if you want to help out, if you think you can add value, if over time we'd like to invite our community members to host podcast episodes themselves, write stuff, a lot of exciting things we can do. So I'm very excited for this moving forward. Phil, Devin, thank you so much for joining me. This was really fun. Listener, thanks for listening, and let's speak again next week. Cheers.